Pos Malaysia Berhad. Pos Malaysia is the country's national postal service provider and the sole licensee of Universal Postal Services. With a history spanning over 200 years, the company has expanded beyond the traditional distribution of mail and parcels to include retail, logistics, and aviation products and services. It has also shifted from a mail delivery firm to a parcel delivery company that also delivers mail. The company was established in 1992 in Kuala Lumpur. Their vision is connecting Malaysia and beyond for today and tomorrow. And for the mission is build and deliver the network of choice. Pos Malaysia Berhad owns 11 subsidiary companies in total. Pos Malaysia stays abreast with the postal development in the international arena with its global counterparts through its participation in the Universal Postal Union (UPU), Asian Pacific Postal Union (APPU), Asian Postal Business Meeting (Asian Post), and Commonwealth Conference of Postal Administration (CCPA). We move to the factors to be considered by the company, and the first one is nature of the product and services. Second, nature of the production process, and the third one, type of class of customers, and last but not least is distribution method. For the nature of product and services, Pos Malaysia Berhad's primary business is to provide services. In general, Pos Malaysia Berhad is well known for its postal services, which include basic mail, couriers, and parcels. There is also a logistic operation that includes haulage services, freight, forwarding, and shipping agency. Aviation also encompasses cargo and ground handling as well as in-flight catering. Next, we move to nature of the production process. Pos Malaysia Berhad offers a variety of ways to get their services. Pos Malaysia Berhad services are just a stone's throw away for customers since they offer direct entry via retail outlets, drive-through, postal boxes, postal machines, and many more. Because of sophisticated technology, users can also access the services online or through mobile apps in order to process the things. Next is types of class of customers. The company's customer base is diverse. Essentially, Pos Malaysia Berhad provides its services to all individuals, both local and foreign, as well as companies, particularly SMEs, so people from all walks of life can benefit from that. Lastly, distribution method. Pos Malaysia Berhad services are distributed via various modes of transportation such as ships, lorries, bikes, flights, and cars to ensure that items are delivered safely and on time. Additionally, a parcel or mail can be picked up by the courier and delivered to the designated location via the app, that is Easy Parcels.
What is segmental reporting? Segmental reporting is a reporting of the operational segments of a company in the disclosure of its financial statements. Types of operating segments. There are two types of operating segment, and Pos Malaysia Berhad applies to both types of operating segment. First is business segment. Pos Malaysia Berhad has three reportable operating segments that can be distinguished from one another and provides revenue to the company. The three reportable operating segments in Pos Malaysia Berhad, which include postal, logistics, and as well as aviation. There's also called the other segment, which is non-reportable segments that did not achieve the criteria of reportable segment, which is the 10% rule. Besides that, geographical segment. Pos Malaysia Berhad provides its services both locally and as well as globally. In addition, our clients include regional e-commerce page delivered into Malaysia and to various destinations across the globe. However, like overseas segment like in Thailand, does not contribute to more than 10% of the consolidated revenue and assets. Hence, information by the geographical segment is not presented. So now, I'll be presenting on the responsibilities of the Chief Operating Decision Maker of this company, which for this company held by Datuk Sri Syed Faisal Albar, beside AR Albar. He is the Chairman Non-Executive Director of Pos Malaysia Berhad. So here's the responsibilities of the Chief Operating Decision Maker. He is accountable to the board for the authorities that are delegated to him and for the performance of the group. This is because the CODM is responsible in ensuring that all the product and services provided by the company can be maintained so that they can achieve and maintain the satisfactory performance of the industry. Next, he also held accountable for the overall organization, management, and staffing of the group and for its procedures in operational and financial matters, including in the areas of staff conduct, discipline, and to promote leadership by example. The GCE is also responsible for developing and recommending to the board a long-term strategy and vision for the group that leads to the creation of shareholders' values, and he needs to ensure that the objectives and goals set in strategy plan are achieved. The CEO responsibility includes in fostering a corporate culture that promotes ethical practices, encourages individual integrity, and fulfills the group's social responsibility. And as the CEO, he leads this company in maintaining a positive and also ethical work environment. Last but not least, the most important one is to Next, we will move to the next part of segment reporting, which is to reproduce a segment report of Pos Malaysia Berhad. Before that, we need to identify first the reportable segment and non-reportable segment. Operating segment are only identified as reportable segments and separately disclosed if they meet the quantitative threshold tests, which are 10% threshold test and 75% rule. The 10% threshold test is the test that the percentage must be 10 or more to be considered as reportable separately disclosed. It consists of three thresholds: revenue basis, profit and loss basis, and asset basis. Revenue basis is where the total reported revenue is 10% or more of the combined revenue of all operating segments. Profit and loss basis is where reported profit or loss is 10% or more than the combined profit or loss of all profitable operating segments, whichever is greater, while asset basis, which are its assets, are 10% or more of the combined assets of all operating segments. Meanwhile, if the operating segment does not meet 10% threshold, which means less than 10%, if it is to be classified as non-reportable segments and to be combined and disclosed under all other segments category. However, as for Pos Malaysia Berhad, we are using the revenue basis to measure the operating segment. The operating segment of this company consists of postal, aviation, logistics, and other segments. After we apply the 10% test, we can identify that there are only two operating segments that meet the requirements of more than 10%, which are postal and logistics segments with 73% and 12% respectively. Therefore, they are considered as reportable and to be disclosed separately in the segment report. However, aviation and other segments did not meet the 10% requirement as it is less than 10%. Therefore, they will be combined together under all other segments categories in the segmental report. After determining the reportable segments and non-reportable segment, the entity must conduct a 75% total revenue requirement. This test requires at least 75% of the total revenue of the entity to be accounted for the combined as the revenue of identified reportable operating segments. However, if the reportable segments are less than 75%, additional segments must be reported until the threshold is reached. The 75% tax of Pos Malaysia Berhad is calculated by adding the external revenue of postal and logistics, then divided with the total external revenue of all operating segments. As a result, we get 88%, which is more than 75%. Therefore, no additional segments to be reported. In order to have at least 4 reportable segments and 1 non-reportable segment, a new adjustment has been made. There's an additional of retail business segment and international business segment as a new operating segment. So, 10% threshold tax is to be applied again and after the adjustment. Now we have 4 reportable segments, which are postal, logistics, retail business, and international business segments, and 2 non-reportable segments, which are aviation and others. 75% tax requirement has also been made, therefore, no additional segment to be reported. Finally, a new segmental report of Pos Malaysia Berhad is to be produced. As we can see in the report, postal, logistics, retail business, and international business are separately disclosed as there are reportable segments. Meanwhile, aviation and others are combined as one under all other segments category, as it fails to meet the 10% threshold tax requirement.
Now, we move to the advantages of segmental reporting. The main advantage is transparency. Analysis, potential investors and other stakeholders need to complete information to evaluate a company's sustainability, growth and monitor its management performance. The second one, separation of profitable segments. For business that operate in different categories or geographic areas, segment reporting can reveal which areas are profitable and which are drains on the bottom line. If the segment reporting shows that overseas operations are more profitable than domestic operations, it could prompt a change in strategic direction. Last but not least, it allows shareholders to get a better sense of fluctuations. Segment reporting also allows financial statement users to understand better the fluctuations that might affect overall numbers for each segment. If a business shows much higher earnings than expected, segment reporting shows where those earnings are coming from. A shareholder also can look at the same report to determine if the numbers are sustainable. Now, we move to the disadvantages. The first one is emphasis in the present segment reporting can place too much of a focus on short-term numbers. For example, a business might create a division just for its online work. That division could run a significant deficit before the right people and infrastructure are in place. If these losses are outweighed by the company's overall performance, they might not stand out on the financial statement. The second one is data manipulation. Segment reporting lends itself to data manipulation. This gives company leaders more discretion in how it determines and how segments are constructed and what metrics are reported. Managers may group together businesses with different business models. For example, it could be grouped with an unrelated profitable business. You need to paint a better picture of performance. Next, allow competitors having an upper hand. It allows competitors significant insight into how the company operates and its individual profit margins. A company could lose competitive advantage by offering up details on what makes it the most money. In conclusion, segmental reporting is information that an entity should disclose to assist users of financial statement to make judgment on the entity. Segment reporting also allows financial statement users to get a better sense of the fluctuations that might affect overall number for each segment. If a business shows much higher earnings than expected, a stakeholder can look the same report to determine if the numbers are sustainable. Interim financial reporting. Financial report covering a period of less than 1 year. FAR570 prescribes the minimum content including disclosures and identifies the recognition and measurement principles that should be applied in interim financial reports. The interim financial statements are unaudited and have been prepared in accordance with MFRS 134, Interim Financial Reporting and Paragraph 9.22 of the listing requirements of Bursa Malaysia Securities Berhad and should be read in conjunction with the audited financial statements of the group for the financial period ended 31 December 2019 and the accompanying notes attached to the unaudited condensed consolidated financial statements. There are two methods of basis of preparation. The first one is integral method. Interim period is considered to be an integral part of the annual accounting period. Accruals and expenses across all periods must be spread even when you incur these events in some periods and not in others. The second one is discrete method, which is Pos Malaysia Berhad has applied this method. Discrete method treats interim accounting periods in the same manner as annual periods and as such is not associated with expenses that may arise during other interim periods of the reporting year.
Next, we will discuss two accounting policies that are MFRS 16 and MFRS 116. MFRS 16, where a lease is defined as a contract or part of a contract that conveys the right use and identifiable asset over a period of time in exchange for consideration. The right to use is basically interpreted as the lease's right to the economic benefits derived from the ability to control the use of an asset throughout its lease term. Initially recognized at cost, which also includes direct costs and restoration costs. Subsequent measurements would need to take into account the asset's depreciating values and other costs or impairment adjustment. Next, allows lessees to apply the fair value model and revaluation measurements for the subsequent measurements of investment properties and certain classes of property, plant, and equipment respectively. MFRS 116 is about property, plant, and equipment, tangible assets that are held by an entity for use in the production of goods and services, for rental to others, or for administrative purposes, and are expected to be used during more than one reporting period. PPE items shall be recognized as an asset when it is probable that future economic benefits associated with the items will flow to the entity, and the cost of the item can be reliably measured. For the measurement at recognition, measure initially at cost regardless of whether they are purchased, exchanged, or constructed. As for subsequent expenditure, the cost to be capitalized if met the asset recognition criteria. Second, cost to be expensed or written off if proven otherwise. Now, we move to types of report. There are 4 types of report. The first one is condensed consolidated statement of profit or loss and other comprehensive income. Second, condensed consolidated statement of financial position. Third, condensed consolidated statement of changes in equity. And lastly, condensed consolidated statement of cash flows. Next, we will be discussing on the period for the current interim and also comparative for each statement for this company. So, for the statement of financial position, since we are using the third quarter, the current interim period is 3 months, which start from 1st July 2021 until 30th September 2021. Meanwhile, the comparative reporting period is 12 months starting from 1st January 2020 until 31st December 2020. For the statement of profit or loss and other comprehensive income, interim period is 3 months, which start from 1st July 2021 until 30 September 2021. Meanwhile, the comparative reporting period is 9 months starting from 1st January 2021 until 30 September 2021. For the statement of cash flow, interim period is 9 months, which start from 1st January 2021 until 30 September 2021. Meanwhile, cumulative year-to-date reporting period, which is 9 months starting from 1st January 2021 until 30 September 2021. The unaudited condensed consolidated statement of profit or loss and other comprehensive income should be read in conjunction with the annual financial report for the financial year ended 31st December 2020 and the explanatory attached to the interim report. For the first adjustment is inventory. As at 30 September 2022, the cost is 7.79 million ringgit. Meanwhile, the net realizable value is 7 million ringgit. The inventories are measured at the lower cost and net realizable value. Net realizable value of 7 million ringgit is lower. Therefore, the value of inventories is to be adjusted and written down to its net realizable value in the third quarter on statement of financial position. Third, loss of inventory of 790,000 ringgit should be recognized in statement of profit or loss and other comprehensive income. The second adjustment is trade and other receivable. On 1 September 2021, Pos Malaysia Berhad had received a payment of 35,000 ringgit by check from one of their debtors. For example, debit bank 35 ringgit, credit trade receivable 35,000 ringgit. This is the statement of financial position before adjustment. Meanwhile, this is statement of financial position after the adjustment.